Money FM 89.3, best of the breakfast huddle. Why it matters on Money FM 89.3.
Money FM 89.3. Good morning. It's the Breakfast Huddle. Elliot Danker, Bharati Jagdish and Brian Huang with you.
Yes, and of course, we've been talking a lot in the last couple of years about becoming future ready, about being ready to deal with a VUCA business environment, all that volatility, all that ambiguity, uncertainty. What does it really mean, though, getting ready for the post-pandemic world? Well, preparedness for the future disruptions, I think, is something that people find quite elusive. How do I begin that process? How do I get on track to indeed be future ready and future proof?
That's where the Future Readiness Indicator comes in. It's designed to measure a company's readiness for deep, long-term secular trends. It also analyzes 86 highest grossing companies in the 4 highest revenue industries. We're talking fashion and retail, automotive, financial services, as well as technology.
So who indeed are the winning and losing companies of the future? Joining us now to tell us more is Howard Yu, Professor of Management and Innovation at IMD Business School. He's also the author of the Future Readiness Indicator. Good morning, Howard.
Good morning.
Hi, Howard. Thanks for joining us. So tell us more about the parameters that you're looking at as you examined these 4 industries.
Right. So we actually have a very specific definition. What do we mean by future ready? It's essentially looking at how companies can build up and scale those capabilities relevant for future competition. So you're thinking about auto industries, just for a quick example, everyone can build an electric vehicle these days. But what really matters going forward is the mastery of software and, over-the-air update on firmware level, all the way to manufacturing securing enough chipset, as exemplified by the global shortages in semiconductors. So using this lens to look over across industry, you can identify capabilities across sector. And then we could calculate and compare which companies have already scaled those future capabilities, which are the companies still trying to experiment at the early phase, and who are the ones who actually have no clue at all. So this is our methodologies overall.
And this is a yearly report, right?
That's correct. So what we've been doing is we looking back in history as well, looking at 10 years of information to looking at what do companies have to do in order to scale up those future capability, whether it's the learning outlook, whether it's the resource allocation, pattern of resource allocation, all the way to the ability to take action rather than just standing by and assess with no end.
Cool. But and what's the weight that comes with this year's report, considering we are trying to live in this post-COVID world?
Yeah. One of the surprising findings I've discovered is the pandemic really is a stress test. It really teases apart the winner versus the loser. Take finance as an example. Before the pandemic, there's always those who are more future ready in terms of mobile service and mobile payment and AI, etc. And what the pandemic has done is to really push those who are on top of the ranking pack, such as DBS and Ping An, their gap between the leading pack versus the average get widened. This is the huge implication because right now we're entering the sort of post-pandemic world, and those who are future ready stand a much better chance to capitalize opportunities coming along in 2022.
You mentioned a few factors that could imbue someone with the title of a future-ready organization. But break it down for us even further. What does it mean in terms of an operating philosophy? What does it mean in terms of taking action on these philosophies?
Right. So what we saw is organizations that can scale up these future capability essentially needs to go through 4 stages. Stage number 1 is, kind of see what is coming to the next, seeing what's next. That is actually easy because these days we are experiencing industry convergence. You go attend any industry conference, everyone talking about the same thing. So seeing what next is actually quite easy. Stage number 2, you have to experiment. This is where bias for action is really critical. You have to embrace failure and things that design thinking workshop and lean startup methodologies executives always talk about comes into play. Then the final stage is really key, is to, based on emerging evidence, you really make critical trade-off and really push and to make this irreversible bet based on emerging evidence. This is usually where company couldn't move fast enough because the top management team did not have a shared viewpoint. When they don't have shared viewpoint, that means that they are unable to make difficult decisions. We see is organizations really need to get through these 3 stages, and the winners are the one who cycle through the complete cycle over number 3 already.
Prof. Howard, let's talk about winners. Any chance you would have an example of a company that has done just everything that you've talked about and how they are in an advantageous position for the future?
What's interesting, if you're taking, let's take, retail and apparel sector, fashion brands. Of course, everyone have for the longest time talking about e-commerce and direct-to-consumer and things like that. But during the pandemic, you see a lot of the retail brands gone bankrupt. A lot of the retailers actually struggle, despite they've been talking about e-commerce for decades. But then you have companies like Lululemon and Nike. Then on top of the ranking before the pandemic, you see during the pandemic, they really shine. They're able to pivot to e-commerce in a major way. Nike do live streaming all across China. So despite all the retail stores get shut down, their revenue actually rose. This is what future retailing and future brand is about. You build that direct consumer relationship. You have omni-channel personalized offering. So people order their personalized sneakers and you can ship in days and still make profit out of it. This is what we meant by future ready, and it's paying off big time right now.
I guess we should point out that it's more than just digitalization. It is about that philosophy and those tenets that you spoke about earlier, right? It's about having the right mindset and approach and taking the right actions beyond digitalization. I'm also interested in knowing more about the companies that haven't done so well, because we can learn from those that have failed as well, can't we?
Right. And one of the most extreme sector you can look at is the technology sector, because the clock speed is so fast. If you miss a product or a couple of product cycle, you basically gone bankrupt. So this is almost like a laboratory for us to see, those who are the laggard, what's going on. And a prime example would be Intel. Once upon a time, Intel is really an iconic company in the semiconductor sector. And today you're looking at them is sort of on the average of the tech sector, which of course casts a long shadow of the whole semiconductor sector. And what we find out is Intel over time, they lost the ability to branch out to new product and services. If you're looking at technology sector, those who shine, they are the one who constantly experiment and scale new business model like Amazon, or they branch out to new services and new area like NVIDIA and AMD. They're able to take what they had in the past and branching into AI, mobile phone, in terms of chipset and so on. Those are the one who win big and stay on top of competition. Versus Intel, for various reasons, because they have factories and so on, they are not biased for action anymore. As a result, the ability to branch out to new service area beginning to diminish. In such a high velocity sector, this is detrimental to growth. I think the ultimate learning across sector is because we're experiencing industry convergence, whether you're in finance or retail, we see the clock speed beginning to dial up. So that entrepreneurial spirit will become more and more important regardless of which sector we're in.
Prof. Howard, from the tech sector, if we were to move on to a more traditional one like manufacturing, we understand that from the report that Toyota, for example, ranks poorly for gender diversity. How prevalent is this issue in the manufacturing sector?
I think is one thing that companies really need to pay attention to. So what we have been calculating is a balanced composite score. So of course, when you're looking at Future Ready, it cannot be just around innovation. Your core business still needs to be healthy so that you have enough cash flow to invest in the future. But for that cash flow to invest in new area, you need to think outside the box. This is where diversity becomes really critical. If everyone looks alike and think alike and behave alike, it's hard to imagine the company can really do something rather radical. And so we come up with these 11 measures to arrive at a balanced and composite score. And so I think going forward, what we're seeing is because of industry convergence, companies really need to learn from outside, to borrow ideas from outside your own sector. This is why diversity is really important. Now, Granted, Toyota is doing pretty well within the pandemic, and on our score, they rank number 2 because they are able to and know how to stockpile with semiconductor chipset. But since automotive and future mobility is really outside of manufacturing a passenger car, so I think that diversity still looms very big going forward for the sector.
That's certainly something that more and more companies are looking into more closely. Let's talk about the financial services sector, because that's one that has been required to pivot as well more rapidly in these times, right? The traditional banking sector moving into fintech, so on and so forth. I understand that HSBC didn't do so well. What's going on there? What can others learn from this?
Well, this is a very big irony around the entire financial sector. What we have, you think about almost 10, 20 years ago, most people would think is the retail bank, the traditional retail bank, would stand a much higher chance to reinvent themselves because they own the customer relationship. But what turns out to be the case is most of the retail bank, except those who are really on the top of the ranking, they get locked in with the existing business model. So their core competency get locked in running a retail branch, having really good financial advisor in human form. and of course, today what we see is moving to AI, blockchain, mobile service, mobile payment. So except for DBS, what you're seeing is those who stay on top are the payment company, but they don't necessarily from day one having this direct-to-consumer relationship, i.e. MasterCard and Visa card. They were a payment company in between. People thought they would die away, but in fact, they turns out to be the one who embraced this logic from the IT sector and move into fintech area everywhere. So whether you're Coinbase, such as like cryptocurrency exchange, or your PayPal, you have to work with Visa and MasterCard in order to stay relevant. This is how an incumbent can reinvent. You embrace disruptor, give them tools so that they could come up with new product features, and you make sure your infrastructure stay relevant going forward.
Prof, let's talk formulas for the future or to build a future-ready company. Explore and exploit. This is something that's been mentioned. Could you help expand on it a little bit?
Yeah, this comes back to the cycle that company must go through in order to become future-ready. So again, after knowing what is coming, right, if you are, say, a fashion brand, building direct-to-consumer relationship is really important, then the next phase is you've got to experiment. You've got to experiment from your own right. And so this is where exploration becomes important. And that requires a different mentality and so on. But at some stage, you've got to switch to exploitation, exploiting this new capability in order to scale. Tesla is a great example. They are no longer exploring autonomous driving. They're no longer exploring software, unlike other OEM. They're exploiting those new capabilities. Others are still exploring. That distinguishes Tesla against all the other competitors as a result.
Thing is, Prof, it is hard to know what's coming, isn't it? You did mention that, you kind of got to know. And data might tell you that, but a crisis could happen and change all of that, change the complexion of it all. So what's really the mindset that companies should have at this point?
I think you're absolutely right. I mean, these days, to predict the future is harder and harder, and particularly with the acceleration of climate change and all this pandemic, who knows what is the big crisis coming along. But what we're seeing is organizations must invest in next generation capability when time is on their side. The story of Nike and Lululemon, Tesla and Microsoft in the tech sector, that's to illustrate when time is good. Right now, time is actually good because corporate profitability hitting all-time high. It's exactly the responsibility for executives to invest and make investment into capabilities, whether it's AI, advanced automation, ahead of time. When crisis hit, then they would have a buffer. They have the buffer because investors would have faith in them so that their share price won't tank. They can raise debt at a lower interest rate. If anything, they can pivot the strategy much faster than others. So, yeah, it's a cautionary tale. Right now, time feels good, and it's exactly the right timing for us to prepare for the next wave.
Prof. Howard, this one, I guess this is a little bit of an opinion and a personal observation question. In your opinion, which countries are leading the way in terms of having these interlinkages between the different sectors? You're in New York now. What are you seeing?
Yeah, so I think it depending on the size of the nation, we've got to play different games. So, there are big economy like US and China, right? That the state really play a disproportionate role in they must make sure the infrastructure is good so that private company can take advantage and scale easily. So things like ease to do business, good infrastructure, ubiquitous connectivity, these are really, really key. Now, for smaller nations in open economies such as Singapore and Switzerland, where IMD is located, then it's the ability for companies to really keep an open-minded because they would require this huge export market in order to drive growth. And the ability to navigate, particularly this geopolitics going forward, becomes a competitive advantage. Because as a boutique, if you will, a boutique nation that are wealthy and open, we cannot afford to pick side. And right now what we're seeing is the flaring up of politics is increasingly become more and more important. So executive for the first time, business executives needs to have a high literacy in terms of geopolitics. In the past, you don't need. Right now is a prerequisite.
So against the backdrop that we're seeing today and some expected predictions for the new year, what companies or sectors do you think have the capability to rise in your future readiness rankings?
Well, I think what is really interesting these days is if you're looking at this idea of industry convergence, every sector is going through technological shift. It's almost like there will be no sector that is not technology driven. And so, of course, the tech sector, the incumbent, right, whether it's Microsoft or whether it's Facebook or whether it's Google, or Amazon, they would want to get their hands into these different verticals. So what we're seeing in the auto sector is exactly will play out in other sector. That whether it's Detroit can learn to build a smart car faster, or Silicon Valley giant can build a good car based on learning about mechanical engineering faster. And so that type of tension would play out across all sectors. So this is the battle that we must pay attention to.
Interesting conversation. We've been speaking with Howard Yu, who is Professor of Management and Innovation at IMD Business School. Prof, thank you so much for your time this morning. You take care and stay safe, yeah?
Great to be here. Thank you.
To listen to more great interviews, download our podcasts at moneyfm893.sg or download our audio app. That's AWEDIO. Available on Google Play or the App Store.